Hi, it's good to be here. So I'm going to try this out. Dzień dobry, dobrze być tu z Państwem dziś. Did I say it right? Good. Okay. My name is Roy Ben Daniel. I work for Visa. I lead the innovation and strategic partnerships team in Tel Aviv. I'm going to give you a glimpse of that and what we do. The purpose of today's presentation is, well, paying with the finger is going to be a small part of it, but is really to give you a screenshot of fintech trends that I've been seeing and I've been researching independently. This is not Visa View, but I hope that you find this engaging and interesting. And just before we begin, with a raise of hands, who here in the crowd is an entrepreneur? Okay, like 4 or 5. Okay. The reason I'm asking is in Israel, there's a very specific code in the startup community. So if you're with a jeans and t-shirt, you're an entrepreneur. If you're with a button shirt, like I am, you're a corporate guy or venture guy. And in Poland, everybody dresses nicely. So I always can't tell the difference when I'm in Poland. So this is our disclaimer. If you're media, please don't quote me without my approval, because I'll get fired. And again, this is only my personal stance. So what is Visa? Visa, without going too much into details, Visa is a payment network. Our founder that founded the company back in the 50s was creating this vision of exchanging value, right? So Visa is all about exchanging value for everyone at any time, at any place. And at the Innovation and Strategic Partnerships team, and with our network of innovation centers, San Francisco, Miami, New York, London, Berlin, Dubai, Singapore. We're actually building our center now in Tel Aviv. We're innovating on the edge of the network. So our approach is really to see how we can build partnerships with the venture community, with startups, with big tech companies, as well as innovate with our clients in order to bring innovation to the company and then to consumers, merchants, and banks and tech partners. So we stand on 3 legs. Strategic partnerships to the left is where we engage with big technology companies such as Apple, Google, Facebook, Uber, IBM, Intel, sometimes technology-driven, sometimes business-driven. Our second leg is innovation programs. This includes our venture program. We invested in Stripe, Square, DocuSign, pretty successful companies. And this is actually, the venture program is actually the heart of our activity in Tel Aviv. So this is our focus in Tel Aviv. And our network of innovation centers where we do business and technology innovation with our clients and our partners. And so Visa does many interesting things in our innovation programs. I didn't know there was going to be such a strong focus on IoT, right, before I speak. But these are all good examples of stuff that's partly demoing, partly commercializing. We partnered with Honda and a few other automotive companies to bring payments in cars, in parking, in drive-thrus and whatnot. We partnered with Swatch to do a connected watch that you can pay with. And this is actually a payment ring. So I can pay with this ring, and this was a demo that we did with our team of athletes in the last Olympics. And actually, a funny story, I went to Berlin, and this is still not commercialized. We're still working on that program. And I went to Starbucks, and I paid for coffee with my ring, and the cashier didn't understand what I'm doing. And then, the receipt came out, and it was like wow, this guy paid with his ring, and for 5 minutes I was the star of that Starbucks. So I had my 3 minutes of fame in a Starbucks in Berlin, thanks to this ring. And this is a payment bracelet and an authentication bracelet. So we're well embedded within the IoT payment landscape, and we partner with a lot of entities to bring value in that sense. Okay, so as we said, just trying to give you a taste of stuff that I've been seeing, and we're going to touch on three main spaces or three main subjects: investment trends, Asia, and collaboration between startups and banks. Okay, so this is global fintech financing, and fintech is really booming. You can see just a few years back in 2012, global fintech investing was $2.5 billion, all the way to the left of the chart, and last year we were at $12.7 billion across over 800 deals. Can anyone guess how much was invested in Europe? I'm going to ask a few more questions. I'm stressing here on stage, so you can share the pain with me. Who can guess investing in Europe last year? You, sir? No idea. Okay. Just $1.2 billion, right? So Europe is still a small chunk of that piece, and we're going to get to other continents and regions later in the slides. And also, what we're seeing is an increase in average deal value. So we went from in the past 4 years. $5 million, $10 million, $17 million in 2015, small decrease in 2016 at $15 million. So average deal size is increasing. We saw a decrease in 2016, and actually Q1 of 2017 brought another uptick, another increase in average deal value. And this is happening because of two things. First of all, fintech is winning. A lot of fintech companies are expanding their operation, and that entails hosting services and IT spend, and marketing and sales, and building new offices in new regions, and that takes a lot of capital. And the second thing is that investors are doubling down on their current portfolio, divesting and making their portfolio more robust in order to minimize risk. So these are the figures. This is the analysis of what we saw in 2016, and you can see the average deal value going up from 5 to 15. But what is really interesting in my eyes is where the money is going, right? So the fintech landscape is quite a complex one, right? You have very back office, back end kind of systems and spaces like asset management, investment banking, large corporate products. But these take only a relatively small chunk of the pie. If you look at personal and SME, number of companies, that's the upper pie. Those startups represent 60%. 6 out of 10 startups is in the SME and personal space. And they actually take more in terms of capital. So if you look at the lower pie, they take 73% of capital raised by fintech companies. These are figures from 2015. So a large chunk is going to consumers and SME. And by product, we're seeing loads of money going into payments and lending. So 21% going into payments and 43% going into lending, especially when it's off balance sheet lending. You need a lot of capital to grow. And US, China, UK, Sweden are leading. And what's interesting about this is that there is a race, there's a strong competition on the last mile experience of the consumer. What's interesting is that payments make up only 7% on average of a bank revenue stream. But that last mile, that interaction with the client represents a lot of data and a strong customer relationship that banks and fintechs are all chasing. So this was the investment piece. We're going to go right into Asia. Okay, trying again. Who can guess how much was invested in US in fintech last year? We had 12.7, now 5.4. Okay, tough crowd. That's fine. So US is first with the 5.5. Asia is second with 5.4. Again, Europe way behind with 1.2. In Israel, by the way, we have a very robust fintech ecosystem. And last year, there was $500 million raised by fintechs in Israel. So look at this growth in Asia. Between 2012 and 2016, just in terms of nominal value, fintech startups raised 18 times more than they raised in 2012. In terms of pro rata, in terms of the ratio, the global ratio, Asian fintech represented only 12% of fintech capital in 2012, and in 2016, it represented over 42%. So that's over 300% growth. And it's number one in terms of payments, meaning payments take up 38% out of the whole pie, and that is far more progress than other markets. So what is happening in Asia? So there's something interesting is happening in Asia. A lot of capital is going into fintech, especially payments and lending. Take a look at these charts. This chart. The blue one is internet companies, WeChat, Alipay, Alibaba, those kind of companies, and the orange one is retail banking. So all of the big Chinese banks, and these are their customer bases. So you can see that the customer bases of the internet companies are slightly ahead or kind of on the same playing ground with the banks. And what we're seeing is actually internet companies became providers of financial services, right? So China is a leader in P2P lending, right? A marketplace where I can lend to someone I don't know, and vice versa. And there are over 1,000 sites of P2P lending in China. In terms of lending and payments and banking services, all of these are being provided by Chinese internet companies. So it's quite a phenomenon. And this is due to, this is an estimate of the Alibaba revenue in 2015, about $450 billion. And in orange, you see an estimate of Amazon. The reason I can't put the names is that our legal team is quite a tough legal team. But in any case, these are the estimates and these are the numbers. And China is winning big. So e-commerce and payments is huge in China, and it's due to three main reasons. So all of us in the Western Hemisphere, we experienced the birth of e-commerce and online shopping in the 90s. And we're seeing a strong boom lately. Some media outlets are talking about the death or decline of physical retail in the US. But what's interesting in China is that if you take the Western world, and we had our own shopping DNA and shopping habits, and we're slowly growing out of them or shaping our consumer behavior, in China there was really no strong physical retail, no big chains, nothing similar to the Western world. So there was a leapfrog in terms of consumer behavior, right? So they went straight, together with increase in Chinese income, they went straight to shopping on e-commerce. And just last year, e-commerce in China was $750 billion. That's more than the US and UK put together. An average Chinese shopper spends about 30 minutes on Taobao, which is a huge marketplace for anything really, which is 3 times more than what the average American consumer spends on Amazon. And it's more of an experience, right? Chinese and the Asian market in general, they go to these e-commerce sites to enjoy. It's engaging. There's TV shows there. There's competitions. There's a whole world of just engaging and enjoying. And at Amazon, you know that you want a product, and you just go online and buy it. So that's one thing, leapfrog in terms of e-commerce behavior. Secondly, there was leapfrog in terms of mobile, right? So they went straight from no devices, no laptops, straight to mobile. And if you look at predictions to mobile e-commerce in China, it's supposed to hit 75% by 2020. Compare that to 46% only in the US by estimates in 2020. And another interesting thing in those terms is that Chinese apps are super apps. You can order a doctor's appointment, movie tickets, airline tickets, even buy cars, and they do all that. Stuff that you can do with only one, Alibaba or Taobao or one of these super apps. You probably need 15 or 20 apps to do it in the Western world. The last thing that's interesting and made that really possible is that the payment infrastructure. You look at physical point of sale, credit card terminals, and credit card penetration in general. Again, in the Western world, the penetration is really high in terms of merchant as well as in terms of consumer. And that was not the case in China, so they went straight to mobile. So e-commerce, shopping behavior, mobile, and then payment infrastructure made all of this possible. So the third trend, or the third thing I'm seeing, in the middle, that's a Polish entrepreneur because he's dressed so nicely, is that I bring no news. It's really easy to build a company, right, today. And especially now in Fintech, you have all the tools and the whole ecosystem is there for you to help you. All the way from venture capital to startup competitions, to accelerators and incubators, to APIs, to just plain partnerships and deal making, make the fintech entrepreneurs' lives really, really comfortable. A recent survey by Mass Challenge said that 23% of corporates worldwide say that partnering with startups is essential to their business. Another interesting figure is that Accenture did this research, and they kind of separated fintech startups to competing fintech startups and collaborative fintech startups. So collaborative can be ones that chase the customer, but wanna partner with big corporates. It can also be just simple fintechs that sell enterprise software to big banks. And they saw that in 2015 there was an increase of 138% of investing into this collaboration space, which brought that collaboration group all the way to 44% of all investing in fintech. Another interesting figure is that corporate venture capital, such as ourselves, they make up 30% of all investments in fintech today. And an interesting space in that sense is online lending. Online lending is something that fintechs have identified as a very lucrative space. There was a gap between consumer need and what banks were able to give. And companies such as OnDeck, Lending Club, Prosper, they do all kinds of partnerships, whether it be white label, referrals, co-branding, just to name a few. That's I can't just remember all of this, but BBVA with Prosper, Union Bank with Lending Club, Citi with Lending Club, RBS with Funding Circle, BBVA with OnDeck, JP Morgan and OnDeck, and the list goes on and on. And in Israel, we're seeing in the past 2 or 3 years, we're seeing a boom in terms of corporates wanting to engage with the local startups. So Citibank has a huge R&D center in Israel, which includes a venture arm and an accelerator. Barclays, they have the same. We have what's called The Floor, which is a fintech hub by private entrepreneurs, but they brought along Itesa San Paulo and Accenture and these big banks, and they help minimize the gap between how a fintech entrepreneur presents, builds the products, and so on, all the way to making a deal with the banks. So that's the trend, and what's driving that trend? So I think 3 things are driving that trend. Firstly, consumer demand. Secondly, fintech growth. And thirdly, regulators. And we're gonna touch on each of those. So banks have a lot of products, right? This is a kind of a historical thing. It's a legacy thing of banking. All these products, and us as consumers sometimes find it challenging to navigate the bank product portfolio. But McKinsey researched that and found that on average, some banks, only a quarter of their products make up 90% of revenue. That's crazy, right? Quarter of the products make 90% of the revenue. So there's a strong, complex kind of environment for consumers to navigate. And another interesting figure is that you can increase consumer happiness or satisfaction by 10% if opening an account takes less than 15 minutes. Another interesting figure is that you can increase, on average, consumers that go to banks that are digital first and not branch first, they are happier in 10 or 20 points. In Israel, we're seeing interesting case study. One of the biggest banks in Israel, called Leumi Bank, is actually spinning off a challenger bank. They call it Pepper, and they just said, although we are a very strong and capable bank, we're going to just build an off-site office, build this new company, call it Pepper, totally different branding, totally different team, mostly coming from the fintech and entrepreneurial world. And we're going to cooperate with startups, and we're going to build a digital bank. So in Israel, we have a traditional bank actually competing with itself, right? So they are building a challenger bank. And this relates to the consumer demand. They understand where this is going. Okay, so these are evaluations of fintech companies. Again, my legal team was really tough with me. I cannot put the names, but some of these include Stripe and Lufax and Credit Karma and Funding Circle, Cabbage and Klarna, and these are in billions, right? So the little ones are worth billion, which is amazing. Lufax is first with 18.5 billion, and Stripe is after that. So these are huge companies. So fintechs are growing, and they're pushing this industry forward, right? You see that with Sophie, which is a student loan refinancing company out of the US made by Stanford entrepreneurs. And they are now branching out to Asia and Australia. They raised $450 million especially for that. You see Adam Bank in the UK raising $100 million to compete for the consumer base in the UK. And you also see that with Alipay buying KakaoPay in order to penetrate Korea. So, and lastly, we have regulators. So I think that regulators are actually pushing the fintech industry forward and in some cases, are not a barrier, right? So you have the FCA, the Financial Consumer Authority in the UK. What they do, they built Project Innovate, which has advice for startups. They do Innovation Hub. They do these cohorts to bring startups into the UK. In Israel, there's an innovation authority. There are incubators funded by the government, and the government actually pushes the fintech community forward. The City and Barclays R&D centers are funded partially by the government. So regulators are really influencing this for the better. So two last slides about biometrics. And I think biometrics is really interesting because it's one of these areas where collaboration is really expanding between fintechs and banks, especially in the enabling technology space, right? So these are examples of companies from Israel. VocalZoom, BioCatch, and SecureTouch, for example, they do behavioral biometrics, which is understanding who you are by the way you interact with your screen or your laptop. So each of any of us, we have a unique kind of identity in the way how we press and how we tilt the mobile device and how we swipe. It's really all these parameters, they create this unique identity for us. So, and they can identify who you are before you even make the payment or log in. So that's totally frictionless authentication. And I think we're going to see a lot of that happening in the next 5 years. In mobile wallet, mobile banking, retail apps, you have XPay. So the answer to the question, can we pay with our finger? Of course, we all pay with our finger all the time. We identify on Samsung, on Apple devices. And I think we're only going to see that growing, and that's really enabled in a big part due to bank and fintech's collaboration. So yeah, that's just about my time. Thank you so much. I'm happy to converse and take questions off stage. This is my email if you want to engage. Thank you so much for your time.
Thank you very much. All right.